Hey folks, uh, welcome to this session. And this session is based on the latest technical article in AAA internationals. And the technical article name is, as you can see, Risk and Understanding the Entity. Right. So there are some little changes in risk and understanding the entity. Firstly, you can see right here, right below, that we have now four types of requirements in planning and risk question, right? So previously, you may remember that we used to had three type of requirements. Basically, one is related to we have to identify the risk of material misstatements, or we have to identify the business risk, or we have to identify the audit risk question, right? Now we have overall four types of questions, right? So what are those? Let us look at that, and let me tell you the exam technique related to them as well, right? So firstly, we have the question. First type of requirement is evaluate and prioritize business risks, audit risks, risk of material misstatement for given assigned, right? So what used to happen previously, that either we used to get a business risk in a requirement, or a risk of material misstatement or audit risk in in one requirement. But now what examiner is doing, it's combining all of these three into one requirement, right? So the weightage of the weightage of these uh, each business risk and audit risk, also risk of material misstatement, will be like this: that if you will get the business risk in the question, you will get maximum 2 marks for business risk. For risk of material misstatement and for the audit risk, you will get maximum 3 marks for each of the risk of material misstatement or audit risk question, right? So that will be the difference. That's the little difference, that now it will be a combo of these three, right? And this requirement in particular maybe may have a weightage of up to 25 marks, right? So that's gonna be a change from upcoming exam sessions. Next type of requirement. What will be the next type of requirement? The next type of requirement is interpret the results of analytical procedures in an unbiased manner and apply professional skepticism to support the identification of contradictory information and assessment of risk of material misstatement. Okay, now here what you will have to do, firstly, you have to compute the analytical procedures, right? Obviously, uh, for example, you may compute five analytical procedures, you compute five ratios, right? Then you will discuss on those analytical procedures. Okay, if you will only compute the analytical procedures and you will not discuss on them, you won't get a single mark, right? And this analytical procedures and their interpretation will give you 5 marks, right? How you will get 5 marks? When you will do both. You will calculate the ratios, the analytical procedures, and then you will interpret on them. You will discuss on those analytical procedures, that what are the issues in it and all that. And remember that you has to interpret those analytical procedures in an unbiased manner, and you has to apply you has have to apply professional skepticism on it. Meaning you as an auditor, you have to show to the examiner that uh, in scenario where you will be more skeptical, you will be more alert that there can be an error or the risk of fraud and etc. More alert, right? And to support the identification of contradictory information and assessment of risk of material misstatement. And then simply you have to discuss on the risk of material misstatement. That is, you have to compute the materialities, you have to discuss on the uh, materialities, you have to discuss on the treatments, accounting treatments, right? And then you have to uh, tell about the risk and the impact on financial statements. Okay, that will be your second type of requirement in this new format of the okay, new type of requirements. And then we will have the third type of requirement. And what is that? What is that requirement? Evaluate the result of planning and risk assessment procedures to determine the relevant audit strategy, including audit responses. Okay. Now, in this type of scenario, what you have to do, that means here you may get uh, what you may have to do, you have to firstly discuss the audit procedures, audit risks, and then obviously in that result you will uh, obviously when you plan the audit, you then apply the audit procedures. And then he's saying that you have to those evaluate the procedures. That mean, is that procedures are enough which they have applied, or you what will be your responses to them. uh, So it is sort of a audit evidence, right? And then finally, we have a fourth type of requirement over here, which is saying discuss the importance of the auditor gaining an understanding of the entity, including the applicable financial reporting framework, its accounting policies, significant classes of transactions, balances, and disclosures, and the entity system of internal controls, and recommend additional information which may be required in gaining the that understanding. Wow, now that's gonna be a uh, this this requirement is totally a different requirement. That means in previous or past exams of AAA P7, you didn't face such type of requirement till now. That means it's totally a new type of requirement for you folks, right? So what is saying? Now let me tell you that what you will have to do over here, right? For this type of requirement, firstly, you will tell the importance of understanding of entity. Number one. Number two, including the applicable financial framework, right? That is ISIFRS, for example. Now, what are the importance of those? Firstly, you will tell about it. You will discuss about it. What are the importance of these, right? Now, then you will tell that why accounting policies are important. Okay, then you would tell about that is there policies are correct and consistent or not, are they allowed to change with it, etc. Okay. Then you will evaluate the significance of transactions, balances, and disclosures. Okay, you will tell them, are they enough and appropriate? And finally, as an auditor, you will suggest the additional information you require for the effective and efficient audit, right? So will be your fourth kind of requirement, right? So for so good. Then okay, let me give you a little revision on the objectives of the risk and assessment of risk. Okay, objectives of audit and assessment of risk. So, what is the objective of the audit? I hope you guys remember that what is the objectives of audit, right? Well, the objectives for the independent auditor and the conductor of audit in accordance with the international standards on auditing, right? Uh, what is the objective is risk is that audit risk is the risk that auditor uh, expresses an opinion expresses an inappropriate opinion when financial statements are materially misstated, right? The objective, so what is the objective? It is the objective is to identify and assess the risk of material misstatement, whether due to fraud or error at the financial statement and assertion levels, that by providing a basis for designing and implementing responses to the assessed risk of material misstatement, right? So now the revised ISA 315 states the reasons, right? The reason. Now, what are the reasons that why risk assessment procedures should be carried out? Should be carried out, and that needs further guidance that what need to be tested and how it can be tested, right? So the auditor needs further guidance that what need to be tested and why need to be tested. So this is the reason that uh, why auditor do the assessment of risk. So far, so good. I hope you got it till here, right? Well, the fundamentals of audit risk, which we are studying from the uh, audit and assurance FA AA level, is remains the same, right? That is risk of material. Risk of material remains the same. That is audit risk is equal to inherent risk into control risk into detection risk. Okay. Now, uh, firstly, let me tell you that let me give you a revision on inherent risk. What is the inherent risk? It is an susceptibility about uh, an assertion about a class of transaction, account balance or disclosure, to a misstatement that could be material. To a misstatement that could be material either individually or when aggregated aggregated with other misstatements, before consideration of related controls, right? Well, that's the definition of inherent risk. in easy words, what is the inherent risk? Inherent risk is the risk which business carries since the inception of the business till the end of the business, right? From the start of the business till the end of the business, the risk which business carries is inherent risk, right? Um, so, what are those? Let me give the examples on it. Let me define those inherent risk and the examples on it, right? So, one of a type is complexity, right? Complexity is one of the inherent risk, as because of the nature of the information they provide, it is prepared. For example, uh, let us use different color on it. For example, complex accounting. Complex accounting or reporting requirement, such as the accounting of such as the accounting or the audit of multinationals, right? It can be complex because there will be a related party transaction, there will be a foreign currency transaction, then many more. There will be a financial instrument transactions, as which can make it complex. Another example, subjectivity, result from inherent limitations in ability to prepare information. Objectivity, right? For example, subjectivity can make it can give rise to a inherent risk because of for example, due to a choice of valuation methodology. Okay, or basis of accounting estimates. Okay, uh, another example, the change, right? The changes in the business conditions, events of change which can affect the businesses. For example, you know, for example, change in regulations, change in business environment, or you can say change in customer, change in customer. You got a major new big customer, or you lost the major customer, or you going for a geographical expansion, that sort of stuff, right? Okay, then we have I have the fourth example for you, that is uncertainty. Okay, uncertainty is another example for you folks. Uh, arises when the required information cannot be prepared based on sufficiently precise and comprehensive data. For example, contingent liability. It is uncertain scenario. It will either happen or not. Uh, Uncertain key issues such as legal issues, such as financial issues, such as the audit of a company, where the litigation issues, right? So these are the examples of inherent risk so far. I hope you get it till here. So auditor must need to consider the impact of the accounting policies, financial reporting requirements, including industry-specific requirements, when assessing the risk of material misstatement. There are several reporting standards which need to be, which can be subject to misapplication. For example, such as IFRS 15, revenue from customers and contracts and customers, or IS 37 provisions, contingent liabilities and contingent assets, foreign currency adjustments, as I told you earlier as well, right? So there is a little change in inherent risk as well. That is the spectrum of inherent risk. What does spectrum means? Spectrum means the scope, that how wide can be the inherent risk. So for the identified risk of material misstatement, risk of material misstatement at the assertion level, auditor is required to carry out auditor required to carry out what? They have to carry out separate assessment of inherent risk, right? And control risk. This separate assessment was introduced in the revised ISA 315 to maintain consistency with the other ISA, that is ISA 330, the auditor responses to assess risk, which also requires auditor to consider inherent risk and control risk separately in order to respond appropriately to assess risk of misstatement at assertion level. Okay. Uh, Next thing that you need to know is inherent risk will be higher for some assertions and related classes of transactions. Okay, inherent risk will be higher for some assertions and classes of transactions. This will require exercise of uh, professional judgment, degree of which inherent risk will be referred, that is referred in ISA 315. The spectrum of inherent risk help to determine whether an identified risk is significant risk or and the concept of significant risk is which is identified risk of material misstatement for the assessment of inherent risk close to the upper end of the spectrum of inherent risk. Now, nextly, what we will discuss, then we will discuss on control risk. Okay, so control risk now. Let us change the color a bit now. Okay, control risk. Control risk is the risk that the entity system of internal control, that the entities system of internal control will not prevent or detect and correct a misstatement on timely basis. This can be due to work, weak or absent internal controls, right? So ISA 315 revised sets out the component of the entity system internal controls and which candidates need to familiar with the component set out in ISA 315. Okay. Um, so let us discuss on this in detail. For example, control environment, right? Which we have already studied in our earlier studies as well. Control environment, uh, or you can say entities, risk assessment procedures, sorry, process, and entities processor, entities process to monitor system of internal control. So what can be the type of control which can be used for these? Okay, you can apply, the auditor here can apply indirect control in all of these cases, right? That means auditor will take the understanding of these control components which can affect the risk of material misstatement at the financial statement level, right? And then we have other two types for the component that is info, and what are those? Information system and communication. Finally, control activities. And here, what auditor will do? It will apply direct controls. And what are the direct controls? Auditor will understand of these components, control components, which can likely to affect the risk of material misstatement at the assertion level, right? So what are the difference between both indirect control and direct control? That uh, here in indirect control, they will have risk of material misstatement at financial statement level, right? And here in direct control, they will have a risk of material misstatement at assertion level, right? So for the further details on the components of entity system of internal control, we at the planning stage, the auditor will consider whether audit procedures will include plan and reliance on the operating effectiveness and control, reliance on entity system of internal controls, which can reduce the level of substantive procedures which auditor will perform. Now, if you want, I think you may want further difference in direct and indirect controls, right? So, what are the direct controls? Direct controls are the specific controls. These are the specific controls which are precise. They are precise enough to address what? To address risk of material misstatement at at assertion level. Okay. For example, performing a monthly reconciliation of the bank account, which is reviewed and all differences are resolved. This is an example of direct control as it ensures the existence and accuracy of the asset bank at the period end. Okay, now indirect control. Well, such as IT controls, general IT controls, which are sufficiently precise to prevent, detect, or correct material misstatement at assertion level. However, indirect controls may support direct controls, therefore, they have an indirect effect on the likelihood that misstatement can be detected or prevented. Okay. Finally, we have detection risk over here. I'm writing about the detection risk here instead of writing it above. Okay. What now? What is it? It is a risk that procedures applied by auditor to reduce audit risk to an acceptable low level will fail to detect material misstatement which exists that could be material, right? So, what can be the standard requirement for it? Okay, the standard back requirement for detection risk is that once the auditor has obtained the required level of understanding and has identified the significant classes of transactions, account balances, disclosures, the auditor must stand back and evaluate the audit evidences arises from the risk assessment procedure. Okay, so once this understanding has been obtained throughout the audit process, the auditor must apply here. What is the requirement that auditor must apply? Professional skepticism. Okay, no matter what. Uh, for material classes of transaction, account balances, disclosures, determined as significant. Auditor must assess it by using professional judgment, whether the determination still is appropriate. Okay, and finally, we have one more thing, that is scalability, which is required by the auditor. And what's that? That auditor must assess the complexity within the control system, including IT environment, by looking at complexities according to the size of the organizations, right? That means, the size, the complexities, the material misstatements, etc., are will vary according to the size of the organization. For example, uh, you know, it's just like a materiality. It's just like a materiality. Maybe 500,000 is material for you, but not for me, due to the affordability level. It is just like that, right? Maybe, foreign currency transaction of $5,000, $10,000 can be material for uh, SME entities, but it won't be material for vast multinational companies. So here, auditor has to apply this scalability according to their professional judgment. I hope you got the uh, lesson, this differences and audit risk and their requirements really well. If you have any questions, you can ask me uh, on my WhatsApp or on my Facebook page or on web, you know in the comments. See you soon next time with next lesson. Till then, take care. Bye bye.